Hello everyone and welcome to the Fintelligent Investor channel. I'm CA Pratiksha Pai. This video is going to be very interesting because we are going to be discussing a whole lot of investment avenues or investment options which you can consider in your investment journey. In our previous video, we had discussed about the various factors to be considered before starting your investment journey, at least in your 30s. So now, when you start your investment journey, many people, either beginner or a seasoned investor, are generally very overwhelmed because there is too much information out there, too much options out there. So let us cover 10 investment options today and let's break it down and discuss it in a very simple and quick manner. This is going to be very interesting and a very knowledgeable video. So stay with me till the end. So let's dive in. The first and foremost is equities market or stock market. So when you're saying that you're investing in stock market, you are investing in a company or companies by purchasing their shares. When these companies perform well, you earn through their profits called dividends, or you earn through the capital appreciation of the shares of these companies, wherein you purchase a share at a lower price, sell it at a higher price and have capital gains. Now, investment in share market is high return but also high risk. So a good lot of awareness and knowledge about the stock markets is required when you want to invest in the stock markets. Secondly, investing or trading in shares can be either long-term or very short-term as well. It can either be intraday trading or a long-term investing depending upon what is the goal of your investment journey and what is your risk appetite and return expectation. If you are not too knowledgeable or too aware about the stock markets, then it would be prudent to only invest in those shares which are market leaders or industry leaders and have a great past track record behind them, so that you can be sure that the fundamentals of the companies at least are good enough, strong enough to keep your investment safe. But no investment is 100% safe. There is always a risk involved and you should be aware of this before you invest in stock markets. Second, we have mutual funds. If you do not have good knowledge about stock markets, or if you don't have the time to keep monitoring your stock market portfolio and you want someone else to do this for you, then here enters the mutual funds. So mutual funds are investment vehicles or investment avenues which pools money from a large group of investors and then invests this money in a diversified pool of equities, bonds, or any other assets. The mutual funds are managed by professional fund managers who have a better knowledge about where they are investing the pooled funds. Of course, they charge you a small fee for their services, but it is very good for a hands-off approach, which means you don't have to keep monitoring your portfolio every now and then, but you should definitely, irrespective of whatever your portfolio consists of, it is prudent to keep reviewing to see if you want to enter or exit any portfolio, any investment avenues. Even within mutual funds, there are different types of funds like equity funds, debt funds, or hybrid funds. In which of these funds should you invest depends upon what is your financial goal and what is your risk appetite. Third is fixed deposits. For those of you who think that you do not want to invest or park your funds in high risk avenues, a safer option is fixed deposit. Fixed deposits are where you keep your money parked for a specified period of time which you agree to beforehand. A fixed rate of interest is specified for the duration to which you have agreed to park your funds in the fixed deposits. These interest rates are generally lower as compared to many other investing options, but fixed deposits are low risk and provide you guaranteed returns. Generally, fixed deposits are better for short-term goals, like for example, if you know that in 1 year you will have a requirement for a certain amount of money which you have today, but you don't want to risk it by putting it in high-risk investing options, then you can go for a fixed deposit for a year and you can see to it that the amount gets released at the time when the necessity to pay it up arises from your side. See, fixed deposits was a great form of savings and a preferred choice for our parents' generation. But do you know what was the preferred choice of investment for our grandparents' generation? Here we come to number 4, that is real estate. Real estate has been a popular investment avenue across generations. And why not? It provides you income which either can be a rental income, or it can also definitely provide you capital appreciation over a period of time. It is a tangible asset and it is also a very good hedge against any inflation. However, in today's date and time, we know that one of the biggest disadvantages of real estate is that the investment required is very huge and it is highly illiquid, which means your money gets locked in for decades in real estate. But hey, there is a solution to this as well. Let us talk about REITs, that is real estate investment trusts. Now, this is a great alternative to buying actual tangible real estate, wherein you can invest with a very low amount and without owning any property directly, but owning a said property as a pool or within a fund. So in REITs, money is pooled from a large number of investors to buy, manage, or sell properties which are income generating. Or in other words, I can say this focuses more on commercial properties. REITs are a good addition to your portfolio because they offer a good lot of diversification, a regular income, and they offer a great amount of liquidity as compared to traditional real estate. Well, the next investment avenue, which is very similar to REITs, however, which does not involve real estate but involves infrastructure projects, is InvITs, that is infrastructure investment trusts. So our investment avenue number 5 is InvITs, which basically pools money from investors to manage and operate infrastructure projects like roads, bridges, and power plants. Again, here you get regular income through dividends, and also there is a good scope of capital appreciation. See, you and I don't know how to build roads, bridges, or power plants, but we are in a time frame right now where India is seeing a very rapid growth on various infrastructure related projects. So with InvITs, you can participate in India's infrastructure growth without having to directly own or manage any of these projects. Next, we come to investment avenue number 6, which is a favorite investing avenue throughout the globe across generations, I can say. And that is gold. See, gold has always been a favorite among investors. Why? Because first of all, it is a safe haven asset, it is tangible, and second of all, it acts as a hedge not only against inflation but also against any world uncertainties like the ones we are seeing right now with so many wars going on, so many uncertainties in place. So against all these uncertainties, gold acts as a perfect hedge. You can invest in gold through either buying physical gold, online gold, or gold ETFs, or even SGBs, that is sovereign gold bonds. Gold provides a very good diversification to your portfolio and can be up to 7 to 8% of your portfolio since it is a safe haven asset. Gold helps to protect your wealth and also gives returns almost on par with the stock markets. Next, investment avenue number 7. For those of you who are looking for long-term savings or to build a retirement corpus, etc., we have PPF, that is Public Provident Fund. This is a scheme backed by the government and provides a decent interest rate. The best part about PPF is that it provides a compounded returns, which means you get returns even on the earlier interest earned. And the second best thing about PPF is that it has a lot of tax benefits, like the returns or the interest earned on PPF is tax-free, and the maturity proceeds that you receive at the end, that too is tax-free. Now, in the old tax regime, the investment amount was also tax deductible, but in the new tax regime, that all the deductions have been done away with. So that is one deduction that you would not be getting. That is one benefit that you will not be getting. However, the interest earned, that is the returns and the maturity proceeds, are tax-free. Next, investment avenue number 8. for those of who you want to build a pension corpus slowly and steadily over a period of time, there is a retirement savings scheme called the NPS or the National Pension Scheme. NPS too has a lot of tax benefits, and it is a way to provide a regular income to you post your retirement. NPS is a great way to plan out your retirement and have a financial security and stability in your retired years, plus an indirect way to also participate in the equities market, since some of your savings in NPS is also invested in equities. Investment avenue number 9, which is slightly lower risk and lower return as compared to stock markets, is the bonds. Bonds are generally the debt instruments by government or by companies to raise capital. Bonds offer you fixed interest payouts and are generally considered safer than stocks. Even within bonds, the government bonds are considered to be lower risk as compared to corporate bonds. This is suitable for investors who are conservative in nature and looking for a steady income. And finally, investment avenue number 10 are the ETFs or the exchange traded funds. As the name itself suggests, these are similar to mutual funds but are traded on stock exchanges. ETFs are a cost-effective way to invest in a basket of assets, and they offer a good diversification to your portfolio. ETFs are great for those investors who want a specific exposure to any specific sector or market or commodities. So with this, we have discussed 10 important investment avenues in India. And if you are with me till here, please comment the words investment avenue in the comment box and get a shout out from me in my next video. So we have discussed a variety of investment options to suit different risk appetites and financial goals. So in your investment journey, be sure to have a good diversification within your portfolio and choose investments that align with your investment objectives and financial goals. If you have any question or need more information, feel free to leave a comment below. And definitely don't forget to like, share and subscribe for having lots more financial updates. Thank you for watching.